Monthly recurring revenue is
Yeah.
key. It will actually drive a higher valuation for the business than
Hmm.
if they were just engaging in single transaction. So if you can stabilize your business in any sort of way with monthly recurring revenue, that's why you're seeing all these apps move to monthly recurring revenue models.
That's
That way they
right.
can sell to the tech VC companies at a higher valuation.
Hey, everybody, welcome back to another episode of the Richer Geek Podcast. This podcast is sponsored by REI Words. If you need help with your website and you don't know what your domain rating is and you need some SEO work, contact REI Words at reiwords.com. Today's guest, we'd like to have welcome Whitney Elkins-Hutton. And I'm going to go through this real quick because she has done a lot. She's a trailblazing woman in the area of real estate. She's committed to empowering busy professionals, turning their dreams into reality. She's the director of investor education at passiveinvesting.com, founder of ashwealth.com, author of Money for Tomorrow, How to Build and Protect Generation Wealth with Bigger Pockets. We all know that. Co-author of international #1 best-selling Resilient Women in Life and Business, host of the Passive Investing Made Simple YouTube show and podcast, and a lot of other stuff in real estate with 800 million plus, mainly in car washes, self-storage units. So we're going to have some fun with that. How are you doing, Whitney?
I'm doing fantastic. Thanks so much for having me on, Michael.
Yeah, well, I'm out of breath with all, and I didn't even get all the stuff. You have been a busy woman. Um, tell us
22-year overnight success. There you go.
22 year. Yeah, that's about like me. Yeah, I started out with one house. Um, but so tell us about that 22 year your career, and then we'll get into some of the details. But what got you started, and how'd you end up where you're at now?
Yeah, definitely. So where I'm at today is the director of investor education at passiveinvesting.com, but I don't have a real estate degree. That's not where I started off. Back in 2002, I bought a house with a significant other, and about a month later, the relationship fell apart. So I became an accidental landlord. I stuffed the house full of roommates. I completed the rehab on the property. And by the way, it was in dire need of a rehab. YouTube didn't exist back then, so I learned everything from a book and going to Home Depot classes. And about 11 months later, sold the property. And that was a pivotal moment for me because I made more in that one transaction than I did in my day job that had me traveling oftentimes 80 hours a week. And so I was like, wow, I made money. I've been deferring my housing costs to my roommates, providing value to them, clean living and stuff. And really the value I created in the world was unhooked from the time that I had to do to create it. And so I was like, how many more of these transactions can I do? So I spent several years living, flipping, and house hacking that eventually decided, hey, I should hold on to some of these assets and generate cash flow. So scaled 36 single family rentals, partnered on a 52 unit apartment building, and then decided that we needed to go bigger or faster, but do we do it actively or passively? So why not both? So I went into general partnership on some larger institutional grade assets and multifamily and self-storage. And then also, at this point in time, I've got a cash generation machine coming in, equity generation machine. And so we decided that we would also scale the passive side of our portfolio in case one day we wanted to ride off into the sunset and not work again. We had that those funds working for us. And so this kind of brings us to where we're at today, or where I'm at today, with over 6,500 residential units, 2,200 self-storage units, 15 express car washes, and a few other business interests at play in there. But really, what I love doing is helping busy people that have a higher and better use of their time and their day job to figure out how to scale a passive portfolio that can work for them.
That is absolutely amazing. I go to different networking. So yeah, I own 5 homes. Ooh, I just hit my 100th home. And I mean, you're talking like a pretty good sized business that you're running and helping to run. I mean, that is absolutely fantastic. And it's not every day that you see someone with that type of portfolio. It's whew, I want to
Well,
be you.
the
I want to be
majority of
you one
it's
day. Huh?
in, yeah, majority of it's in partnership. And I'm sure like,
Yeah,
you investing in hotels, I mean, that is, you go
it's
further
big.
faster when you realize that real estate is not a loner game. Like when you start getting partners, whether you decide to go into general partnership, actually run the deal yourself, or you decide to take more of a limited partner role, that's where you can really unlock the scale portfolios and partnerships.
Absolutely. And listen, everybody, don't go out and become a GP if you don't know what you're doing. Get into the partnership on the LP side, which is the limited partner, and learn from someone like Whitney, because you don't, that's how I got started. There's no way that you can all of a sudden say, hey, I want to own a 100 unit, whatever. You will fail if you don't know what you're doing, if you don't have mentors. Always get a mentor. Now, Whitney, you've multifamily. How's that doing right now? People are they kind of scared, the cap rates, that's why I went away from multifamily. I had several thousand doors, and all of a sudden it's like, yeah, in Arizona, we're getting into that 4 cap arena. And I don't know if I was greedy or something, but what are you seeing now? Are you still actively in that, or are you kind of shifting away from the multifamily?
No, well, I still have active projects. I'm on the hold
Yeah.
side of these projects. So, navigating the current environment. I still fundamentally believe in multifamily as an asset class.
Mhm.
Just like a businesses cycle, so does real estate, and the
Yeah.
different asset classes in real estate cycle differently from each other.
Mhm.
And so right now we're in a part of the cycle for multifamily where cap rates have been compressed, and then you throw on top of that interest rate expansion,
Yeah.
and pepper in some insurances and taxes doubling and tripling in some states, and you had a nice recipe for turbulence in a lot of markets. And so, for me, if it's the right asset in the right market, sure, I would invest in it, because real estate is so hyper local. So I can't really globalize, is multifamily still a good asset in every
Mhm.
market, because in some markets it's not. If your population is shrinking, taxes are increasing, insurances are increasing, you might want to think differently. Incomes are coming down, unemployment's on the rise. They may not
Mhm.
be a good investment in that market, but in other markets where we're seeing an influx of people, incomes are continuing to grow, housing prices are continuing to grow, taxes are stable, insurance is stable, multifamily is still an amazing asset class. Fundamentally, we're underbuilt, from
Mhm.
anywhere from 4.3 to 10 million homes. And, that is a wide number, but with the rise in interest rates in the past 12 to 24 months has pretty much halted construction.
Yeah.
So while in a lot of markets, especially, in the Phoenix, Arizona area in particular, we've seen a lot of delivery come online in 2024 into early 2025. Once that absorption takes place, we're now going to see rents start to rise again, because there's no other construction that's happening, behind
Mhm.
that. And so, while we were in a position to where we could probably be on track in 5 to 10 years to match today's demand, we've kicked that can further down the road with this expansion and interest rates. So I still think in the right market, multifamily is an amazing asset to be in.
Yeah, and I agree absolutely with you. It is different. It's, perhaps in the Phoenix area where everyone who's investing in multifamily wants to go to. It's kind of, you need to find those pockets and those niches in those cities that are up and coming, that need it. And I mean, I have, my God, every week I see some Canadian group or California group or someone coming in Phoenix and just, here's $100 million in multifamily, and it's crazy. But and that's why it's the same with hotels and other asset classes. You find that market that needs it, and that's what being educated and kind of like not sit on your laurels in one market. And I think that really helps. Now, something that's very interesting is you're getting into express car washes. Tell us a little bit, you know, I think that, yeah, you just, is that the kind that you just kind of put the quarters in or put the VC card in and you spray it yourself and
Pray that your 11-year-old doesn't hit you with the hose.
oh yeah, yeah. I guess I did that when I was 11, chased dad around.
Oh yeah. Oh yeah. My daughter, we have a camper van that has to go through one of those DIY type car washes.
Yeah.
And whenever they come back from the car wash, one of them is just completely soaked. Either my husband or her.
Yeah.
But anyways, there's really, the car wash industry is a $38 billion and growing industry. And it's really in its infancy. We're seeing a lot of development in car washes on the primary markets, but what's most interesting is in the secondary and tertiary markets is the servicing of express car washes in those arena. And so express car washes is really that hybrid between the convenience of that car wash, that semi-automatic car wash that's attached to a gas station. So we're not dropping coins in the wall. Nobody's washing their own car. And it's a marriage of that semi-automatic car wash and then also a full service car wash. So somebody pays a subscription, the customer pays a subscription, and they can go and wash their car, perhaps getting it vacuumed out, free scents, tire shines, waxes, the whole 9 yards, as many times as they would like during the month. Now that express car wash is automated. It will read the barcode on their membership. And it's either attached to the car or an app that they have. And it knows based on that membership level exactly what service that car wash tunnel needs to provide. And so it's again, it's kind of like the Chick-fil-A, I guess, of car washes. You get that marriage of convenience. But with the express car wash, here's two things that you get. One, you can operate that car wash and wash about 400 to 500 cars a day with 2 to 3 full-time employees. So it's very efficient. A full service car wash, you're probably at minimum going to have 10 to 15 people on the premise at any one time. And in a self automated car wash, there's just no way you could hit that type of volume. Two, with that tunnel, you can get, you can lower your operational expenditure. You can actually optimize your water usage, your electrical usage, your chemical usage, unlike what you can do in the other types of car washes. And so some people might say, hey, a customer can wash their car as many times as they want during the month. Like, how are we making money? Well, if the membership costs $20 to $30 a month, and the average customer washes their car 1.8 times a month. If I can get the car wash down to 83 cents, which is our average, most of our competitors are at $2.60 a wash. 83 cents a wash times 2, okay, it costs $2 for us to wash the car twice. There's a healthy spread in there of margin. That's a great margin for us to pay, any sort of CapEx and maintenance on the facility, as well as the full-time employees, the overhead there. And so that is how we make money on these type of express car washes.
And I think that's the key also is having that membership.
Yes.
That is so important, ladies and gentlemen, in anything that you do and whatever business that you may have as an entrepreneur is try to get that membership. I mean, that is just phenomenal.
Monthly recurring revenue is key. It will actually drive a higher valuation for the business than if they were just engaging in single transaction. So if you can stabilize your business in any sort of way with monthly recurring revenue, that's why you're seeing all these apps move to monthly recurring revenue models. That way they can sell to the tech VC companies at a higher valuation.
Yeah, it's, I'm even seeing that in hotels. A hotel just opened up in Scottsdale, Phoenix area that has its own separate pool and cabana area that is a membership. And I was like, that seems very, it's kind of like a ritzy kind of hangout. And I was like, there you go. See, everyone is even trying to get that monthly recurring. Because like you said, in the car wash, someone may do it 3 times a month, if they're just crazy about their car, then you get a lot that might skip a couple months. and so it kind of evens out. And I think that is just absolutely phenomenal. That's very, very smart.
Well, here's another like little trick. Most people don't
Mhm.
realize that they pay 13 credit card statements during a year. That's what credit card statements really try to generate 13 statements. And so we even will charge the credit card every 4 weeks. So not just creating 12 months of revenue, but creating 13 months of revenue.
Yeah, yeah. Ladies and gentlemen, Whitney, I think kind of knows what she's talking about. So let's talk about this knowledge that you have and the passiveinvesting.com. People are kind of sitting there saying, okay, yeah, I think she knows what she's talking about. She does a lot. She has a lot of assets. I type in passiveinvesting.com. Tell us a little bit about that site.
Yeah, we're a private equity group and we're based out of the Carolinas, and we focus on helping our investors diversify their portfolios into multifamily, self-storage, express car washes, and real estate debt. And so, we love to focus on the Southeast corridor of the United States and A-class assets. Our self-storage portfolio expands into Colorado and Idaho as well. And those are two really hot markets for self-storage.
Yeah, it's so funny. I think that I forget what the percentage of that people's garages are already full and they need a self-storage unit. It's amazing. Even I go through my neighborhood and people have their garage doors open. I'm like going, what are they doing? It's just amazing. They probably have a big storage unit somewhere also. Now let's talk about the storage units, a little bit in case, some of our listeners are saying, well, there's too many of them. And I'm like, there probably isn't. But people are thinking because they're popping up everywhere, these big boxes, these huge corporations going in with self-storage. How are you looking at that market, and how can you kind of calm some of the people who are saying it's like, there's too many of them?
Yeah, so self-storage is a fairly mature industry. And so I think, there is maybe cause for concern that you need it as an investor, you need to do your due diligence and make sure you're not getting into an oversaturated market. For us, we look to go into markets where there's a lot of expansion in housing and secondary and tertiary markets. So for one, we look for that trend. We also look for no competitors within 3 mile radius of our area, and so and no intention for new builds in the next 3 years for self-storage in that area. So really, we're trying to give ourselves a huge amount of runway. And again, this is kind of the self-storage is piggybacking off of the housing, crisis as well. And so, really, with us being underserved in housing, even if we got everybody into the right housing, a lot of people are going to be in multifamily units. Well, they don't have unless it's a townhome, they're not going to have a garage to store in. They're going to need extra storage space. Another, kind of death, dislocation, people that are moving. I know when my parents passed away and my grandparents passed away, I had to unload the house, I had to put it in a storage unit. When my brother moved out, or my brother-in-law moved out to Colorado, he had to go into a storage unit. And so, and storage units are pretty sticky because once you get somebody to move in, $100 a month, if you raise their rents 3%, 6% annually, that's not going to be enough for them to go get a moving truck and move down the street to a better priced unit, right? So they're pretty sticky. And divorce is another one. That's another trend that really fuels the self-storage arena is, when households separate, generally one person is moving out of the household, or maybe both people are moving out of the household and the house has to sell. So there is the long-term trend of, what's the housing trend in the area? Can we, pair that with self-storage? And then we've got those 4 Ds in there: the death, the dislocation, the divorce, and just like, movement, patterns, like people moving for jobs. Can we pair put the self-storage facility in those different paths?
Yeah, it's interesting that you never think about the different reasons why people have all this stuff. And then hopefully there's a garage sale coming, shortly after, or an estate sale. So people are interested. They say, hey, you know what? I'm going to go to passiveinvesting.com. And everybody, again, it's Whitney Elkins-Hutton. They click on know more, or, talk to me or chat with me, some button. Tell us about the requirements, what you're looking at. Are you doing funds, or is it syndications? Tell us a little bit about what your world looks like on the investing side.
Yeah, well, when we help our investors deploy capital, generally it's going to be into single asset entities. So syndicating a single asset entity like a multifamily building, or we do small portfolios with our self-storage and our express car washes. So, those are, small, like little, kind of like the hybrid between a fund and like a single asset entity. So you get some diversification there. Or we have our debt fund that's open right now. And that is, that any investor that comes into the debt fund is immediately diversified across all the loans that are deployed in that debt fund. And so you can visit passiveinvesting.com and join our investor club. Or if you'd like to some of the free goodies that I have personally on our passiveinvesting.com website, like a free ebook, or if you want to talk with me directly, you can go to passiveinvestingwithwhitney.com.
There you go. Credit investors only?
We do work with accredited investors. That's the investments that we have open. We anticipate at some point in time having a fund open for a sophisticated investor, but right now just accredited.
Yeah, it's easier that way.
It's from a marketing perspective, yes, but we do want to be able to serve everybody if we can.
Well, if I had 1,000 people, they're just dying for the next thing, then you can. You don't have to go through accredited investors. So, Whitney, if there's one last thing that you could tell before we leave, our time is almost up. What have I not hit on? What is something a little nugget or piece of advice that you could give our listeners before you leave?
Yeah, well, so I know a lot of people are really nervous to invest in today's environment. And, one other thing that I do is I help investors understand how to create a really solid financial foundation, put together their investment thesis, and really understand the principles on how to invest. So they can feel comfortable whether the market goes up, down, or sideways. If you're interested in learning more about that, how I work with those type of investors, you can check out ashwealth.com or check out my book, Money for Tomorrow, How to Build and Protect Generational Wealth. I wrote that with that investor in mind, especially given today's market.
It is scary. And you see some people are like, oh, no, this is the time. Some people say, nope. Some people say after the election, there's so many ups, with raising money at this particular moment. With everything that's going on in the world. Whitney, it's been a pleasure having you on the Richer Geek Podcast. Have a wonderful and blessed night, and hopefully all will go well. Everybody, check it out, passiveinvesting.com with Whitney Elkins-Hutton. Thank you, ma'am, for coming on.
Thank you so much, Michael.